The days of double-digit returns are over in the stock market. This seems to be very, very apparent. And people are really looking to a flight to safety and security, somewhere where their wealth is going to be preserved.
This podcast is brought to you by safeasgold.com. Call now for your free gold kit at 1-800-510-9594. An $80 value, this kit and DVD will show you everything you need to know about gold and how to use gold in your investment portfolio. Call 1-800-510-9594.
It's time for the Gold Show. Jonathan Rose, CEO, President of the Capital Gold Group, and Precious Metals Investment Strategist is with us today. Jonathan, as always, good to talk with you.
Oh, it's always a pleasure to be here. I'm excited to talk about a lot of new events in the gold market. In fact, reports from Bank of America and Merrill Lynch indicate that gold bullion has outperformed the S&P 500, the 3-month Treasury bills, long-term Treasury bonds, and high-grade corporate bonds on 2- and 10-year basis. And on today's Gold Show, we're going to be explaining the advantages and benefits of why adding gold is necessary to everybody's portfolio.
Jonathan, each week you like to start with some of the quotes of the week, what significant decisions are being made in business and what the experts are saying. You have several for us this week. Let's start with some of the things, the notable sayings this week.
Well, I know something that's caught a lot of attention this week is the fact that since 2009, there's actually been 53 bank failures to date. And this is the most in 1 year since 1933. And obviously, we're hearing lots of reports of maybe the economic slowdown is really beginning to, come to a halt and things are about to turn around. I don't think so. And in fact, of the words of Warren Buffett, who has clearly stated that the days of double-digit returns are over in the stock market, this seems to be very, very apparent. And people are really looking to a flight to safety and security, somewhere where their wealth is going to be preserved. And in fact, a 6-month CD right now is paying 0.86%, which is nothing, not even 1%. That's not keeping with the rate of inflation. It's not keeping with the rate of the falling dollar. And people are looking for somewhere to park their money where they know it's going to be a store of value. And again, that's why I'm an advocate for gold. And if you look throughout time, members of the royal family, heads of state, they've been protecting their gold. They've been protecting their wealth with gold for centuries. It's no secret.
All right, you mentioned those CDs, and you're right. The rates are just ridiculous right now. It's almost as if you have to pay them to store your money. It's getting so low. So what are our choices? If we want to have security, but we still want to see some growth over time, what choices are left?
Well, like I said, I really believe people should be moving a part of their portfolio sideways into precious metals that you literally get to hold on to. That's where the security is. And in fact, right now, a lot of Wall Street pundits are running around screaming, cash is trash, cash is trash. And now, obviously, there's a slight joke to that, but the mentality they're trying to portray to people out there, the general public, is this is a year where you don't want to be 100% invested in paper. In fact, you want to be invested into commodities, something tangible, something heavy. If it dropped it on your foot, you went, ow. They're talking about gold. And many cultures around the world only consider gold as real money as their currencies are afloat with fluctuations. And the only real wealth is gold, regardless of the value of a currency. So, the biggest mistake people could make this year is simply by not adding precious metals to their portfolio for safety and protection.
Well, I think a lot of people also set it and forget it. They saw the big drop in the stock market, and they've been trying to absorb that, and they're afraid to make any move. But if you sit with the accounts that you have right now and you pull to your CDs and you sit right there, over time, you've explained that there's this thing called inflation that is going to eat away at the buying power of the dollars you've saved. Explain.
In fact, I always talk about this, and when people call in off the radio show, they always tend to quote me about a story I tell. And I always tell people, even my clients, that imagine we were back in the year 1920 and we took a $20 bill and a $20 gold coin, which is a 1-ounce coin back then. Well, that $20 coin and a $20 bill, they were both worth the same in 1920. And in fact, they would both buy a man a brand new suit. Now, today, that same $20 1 ounce gold coin is over $1,000, and guess what? It would still buy a man a brand new suit, yet that $20 bill wouldn't even buy you and a colleague lunch today. And really, people can see how the value of the dollar has diminished year after year. But if you look at the track record of gold, and it has a tremendous track record, not only has it remained constant, it's never remained zero. And the more turbulent times that we're seeing today in our economy, you're going to continue to see gold rise. And this inflation that we have is very insidious. You don't actually see it, but it's there. And it's like a caterpillar on the leaf taking a small little bite and another bite, and before you know it, it's gone. So maybe a candy bar that cost $1 this year, well, maybe next year it costs $1.17. So, the purchasing power of the dollar keeps diminishing. And if you keep all your money just 100% solely in paper, you're going to realize the effect of the dollar is weakening. And this is more apparent if you decide to go overseas and travel.
And Jonathan, what you're saying is, here we have many of our listeners who are trying to be good, and they're trying to store money away and save for a rainy day. But the mistake they're making is just by sticking it in those CDs, that caterpillar is going to eat away the buying power, and they're going to have only a fraction of what they think they have.
Absolutely. And in fact, these banks, you kind of hit the nail on the head earlier, they're doing you a favor by keeping your money in there, when the fact of the matter is you're not keeping with the rate of inflation, which according to our government is about 4%. You're not keeping pace with the dollar that's shrinking, which has shrunk over 9% the past couple of months. So, how can you, stop these losses that's occurring, without you actually even seeing it? And that's why gold is a storage of wealth. And remember, there's only so much gold out there. Once it's all gone, it's actually gone. And in fact, the world's total amounts of gold accumulated during the history is only about 125,000 metric tons. And this would form a single cube, merely 60 feet by 60 feet by 60 feet, being valued today at $1.4 trillion, which is less than all the money that the government's spending right now on all this stimulus money.
And so they just print up more of these dollars, and they're less of value, and there's this precious limited amount of gold right now, and that goes up because of supply and demand. We're talking with Jonathan Rose, President and CEO of the Capital Gold Group, who has said gold is not only a safe long-term investment, but he says some forms of it have outperformed the Dow Jones over the past 30 years. Gold, he says, is an asset that is proven repeatedly it will maintain purchasing power, and that's what we're talking about today. For those of you who have amassed any wealth at all, that wealth is eroding right now, isn't it?
It is. And don't forget, this is, these facts out there from companies like Bank of America and Merrill Lynch, their research reports have indicated that gold bullion has outperformed the S&P 500, 3-month treasury bills, long-term treasury bonds, and high-grade corporate bonds on a 2- and 10-year basis. And we've kind of been classically trained over the years, to buy more paper, buy more stocks, buy more funds, and when we lose that money, take it on the chin like everybody else. And it really doesn't have to be that way. And I'm a big believer in having a balanced portfolio. So yes, you want your stocks, your IRA accounts, and maybe some corporate bonds that you're holding on to, but another slither of that pie should include gold that you get to hold on to. And I'm not talking about gold stocks, because few realize that gold stocks cannot be redeemed for gold. Only gold is worth gold. So there's a difference from investing in a gold mining company and getting a certificate rather than physical gold where you actually get to hold it in your hand, the tangible stuff. And that's really what I'm talking about, taking possession of the gold, because that's really where the security is.